Look, Ashley.
Gloomier than expected, Matt. And when it rains, it pours. Today is a thunderstorm of worse than expected economic data. We'll begin with U.S. consumer confidence falling to its lowest level ever in October as stocks tumbled and banks shut off credit, raising the risk that spending will take a nosedive. The Conference Board's confidence index dropped to 38 from a revised 61.4 in September. This marks the lowest reading since monthly records began all the way back in 1967. Even the lowest forecast of 45 based on Bloomberg's survey of economists missed that mark. Meanwhile, economic data released on the housing front wasn't much better. House prices in 20 U.S. cities declined at the fastest pace on record as foreclosures climbed before the credit crisis deepened this month. Solar stocks are rallying after Germany's ruling coalition government agreed to implement smaller than expected subsidy cuts. The biggest solar power facilities could face a 10% reduction. Matt, getting sued, downgraded, certainly not the best day for National Semiconductor, which makes chips for Apple's iPhone and other devices, is dropping as much as 3%. The company is being sued by eTool Development for allegedly violating an eTool patent. The stock has been cut to neutral from buy at Merrill Lynch, which said the company faces revenue headwinds and may not be able to increase earnings because of uncertain demand. However, coming up later on the show, we'll hear from Friedman, Billings, and Ramsey's Craig Berger, who has a different take on chip stocks. He'll join Matt to tell us why he's bullish on the sector.
Not exactly what anyone wants to hear, but we may need to brace for it. A massive rally for stocks today that will go down in history books, yet what followed the 5 biggest rallies ever was more red ink for stocks.
Now, I know that you accept that there are certain areas of the U.S. that are in a technical recession, and the collective figure, however, you say is not in a recession. The Fed was very effective in providing stimulus, but we've had some positive GDP data out last week. Do you think that the U.S. economy is out of the woods? Who doesn't enjoy a cold beer on a warm, sunny day? I know I do, and I think Matt probably does as well. We're not alone. Molson Coors Brewing Company is up as much as 9% today as net income increased eightfold. The third largest U.S. beer maker reported 13% more first quarter profit than analysts estimated as sales in the U.S., Canada, and the U.K. rose. The results came as Molson Coors prepares to join its U.S. operations with those of London-based SAB Miller, maker of Miller Lite. Right now it's trading at $56.72, up almost 7%. Meanwhile, Anadarko Petroleum is rising as much as 11% today to a record. The second largest independent oil producer in the U.S. beat first quarter analyst estimates, even as profit fell 83% because of last year's asset sales. Anadarko's oil and gas production fell after it sold more than $12 billion in assets to pay for its 2006 acquisitions. Right now it's trading at $75, up 10%. Meanwhile, Hess, the 5th largest U.S. oil company, is also rising, climbing as much as 8% and just shy of a record. Goldman Sachs has upgraded the stock to buy. It's at $117, up just a little bit more than 8%. You've heard the saying, don't let your emotions get the best of you. Well, that may be some good advice for investors right now, especially if you're feeling panicked by futures and acting on those emotions. The latest Bloomberg data reveals that the pre-market readings by investors are proving to be unpredictable. Data compiled by Bloomberg shows that futures on the S&P 500 index in October understated gains or losses by an average 1.4 percentage point. That's twice the gap in the third quarter. Now, one of the biggest misses was on Friday when futures plunged 6.6% and were limit down. That means they fell the maximum amount before trading was halted. In the first half hour of trading, the index itself did drop just over 6%, but that plunge was short-lived, and by the end of the day, the S&P 500 closed down 1.3%. These false cues are adding to the uncertainty. Arthur Cashin, the director of floor operations for UBS at the New York Stock Exchange, says it's a state of permanent anxiety because you don't know where things are going to go, adding that people are scrambling to try to stay up with it, and so far unsuccessfully. Talk about your good deals. Merrill's chief executive John Thain and trading division head Thomas Montague may receive payouts totaling more than $47 million if they leave or are given lesser roles after Bank of America buys the firm. Here to talk about a slowdown, it's all about timing, and it appears most companies are betting now is probably not the right time for for an IPO. In fact, it's been more than 2 months since the U.S.-based company has held an initial public offering. That was Rackspace Hosting's August 7th debut on the New York Stock Exchange. Would you pay for a government program that hasn't ever backed any programs? Well, you may have to if Congress has its way. Lawmakers may spend at least $10 billion of economic stimulus money on an Energy Department program. And Matt, all this talk about vacationing makes me want to get away, take a vacation.
Let's go to Dubai.
That
Apparently,
would be
that's
great.
the place to go.
It's beautiful. Yes, we should go.
It seems like it'd be a little hot for me.
I will pack now. We're seeing several tech stocks down today for a second day in a row. SanDisk, the world's largest maker of flash memory cards, is falling the most in 2 months, as much as 5%, after the company's CEO said sales were soft last month as rising oil prices have prompted consumers to tighten their budgets. Micron Technology, the largest U.S. maker of computer memory chips, is also falling as much as 7%. And Broadcom, which makes chips used for tracking devices, is also down as much as 5%, along with Teradyne. So what's the reason for the drop? Well, there appears to be several factors. Companies are reporting mobile phone shipments fell in the first quarter, the first drop there since 2005. Secondly, Soitec, whose silicon is used in chips to power Sony and Microsoft game consoles, is posting a fiscal second half loss after sales plunged because of slowing demand from its biggest customers. And again, SanDisk's CEO announcing sales were soft last month are all contributing factors. Taking a look at some of the other market movers we have for you today. Nucor falling as much as 5%.
Expert opinion. Let's turn to Bloomberg's Ashley Morrison. Ashley?
I am kind of an expert when it comes to retail.
I bet.
You know that, Matt. Well, although Coach did beat estimates today, it posted its first quarterly decline since going public back in 2000. And many economists are still betting that we'll see the slowest holiday sales season in 6 years. So for now, it's all about strategy, and some luxury retailers, including Coach, are wising up and finding ways to stay in the game. Coach says it was able to limit discounts and spur sales with patent leather handbags and less expensive purses, helping it weather the slowing economy and falling consumer confidence. Bad home loans have claimed the jobs of chief executives, including Citigroup's Chuck Prince, Wachovia's Ken Thompson, and Merrill Lynch's Stan O'Neill. And yesterday, the heads of mortgage companies Fannie Mae and Freddie Mac were also replaced after the two were nationalized over the weekend by the Treasury. So it's kind of not a good time to be a CEO of a bank. Could cause you some anxiety. It's all about staying in the game, and clothing maker Liz Claiborne is doing just that. It's up as much as 3% after reporting first quarter sales that beat some analyst estimates. CEO William McComb is boosting sales by focusing on customers younger than Liz Claiborne's traditional department store clients aged 35 and older. He's attempting to lure shoppers to Liz Claiborne's own stores with Kate Spade, Juicy Couture, and its Mex label, and has sold or overhauled 16 department store brands. McComb says second quarter profit will be weak after department stores and retail chains lowered prices. The apparel maker has cut 1,300 jobs and closed 3 distribution centers as part of its restructuring. Charles Schwab, Ameritrade, and E-Trade are handling a lot more trades as investors yank their money out of mutual funds at a record pace just 1 year into the bear market. Lots of people are cutting back on luxury. That's never fun, but as the economy continues to slump, fewer people are spending their money on vacations or even just quick weekend getaways, and that's certainly hurting the hotel industry. Welcome back to Bloomberg's Open Exchange. I'm Ashley Morrison here with your market movers. Hansen Natural, the maker of Monster energy drinks, is plunging this morning, down as much as 19%. The company is reporting first quarter profit rose less than analyst estimates. The company reported a quarterly profit of 29 cents a share, missing the average analyst estimate of 37 cents a share. According to the company, revenue was affected by customer purchases made before a January 1st price increase, when the company raised the price of its 16-ounce Monster energy drinks and its dairy-based coffee drinks. Meanwhile, Goldman Sachs has cut the stock to neutral from buy. Right now it's trading at $30, down almost 14%.